Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 4th of October, and a decent rebound for the FTSE after both bullish divergence, the lower lows for the end of September versus the beginning, but RSI the same, around the 30 mark, which is below. So that bullish divergence did kick in. Also, I suppose, a bear trap from below June support around the 69.70, 69.80 area, which was also the floor of that March trend channel as well. So above 69.70, looking for a flip maybe up towards the 71.30 area, which was the initial September resistance as a best case scenario over the next couple of days. Otherwise, below 69.70 on an end of day close basis, we still have the risk of a test down towards 6,800 and maybe even as low as 66.70. But I have to say, at the moment, it looks as though, at least for the near term, i.e., a few days, we might have a bit of a rebound back towards the 71.30 area. Moving along to Bitcoin, which has been a bit of a dead duck over recent weeks, but obviously one day I suppose it will escape from its malaise. We've got that November resistance line there and the 50-day moving average as a block on progress. Today's the first day in the recent past that we've actually managed to have the whole price action above that November resistance line. So that, in theory, breaks the recent downtrend. And we've also got that bullish divergence from September in the RSI window. So that was suggesting that we would track higher. Probably all that's left now is for a decent end of day close above the 50-day moving average and 20,000, the psychological level, to then suggest that we could head up towards retesting the August resistance through 25,000. So that would be a nice little rally. Also got the RSI back above neutral 50 for the first time in 2-3 weeks now, 3 weeks actually. So that is a positive and maybe a leading indicator on an initial move up towards 22,000, that early September peak. On to pound dollar, which I suppose is stabilized after the bit of the mess that we've had over the last couple of weeks. What's interesting here, apart from the funny spike that I've got on the chart there, is that 110 has been support, so we've gone back into that falling trend channel from February, and above that we have been looking for as high as 116 or 117 at the 50-day moving average. So far, not looking too bad in terms of that. So the current level near the 114 area, which is pretty impressive. I think the high today 114.30. So that trend channel back in business after what you could describe as the overshoot down towards 103 and the 1985 support area. We had the RSI down to the low teens as well. So that was also suggesting that we were very oversold. Although, as we said, we were in that kind of position back in April, and we didn't really have much of a rally from there. So the overall trend here down, but zigzagging within that 110 to 117 price channel range. Onto the stocks, which in this first case, Ovation, happier situation. Looks like we've got a bull flag here, basically resting on the old February resistance area of £1, trading either side of that. We've got the 50 and 200-day moving averages both rising. That does suggest that we could head up to the top of that rising trend channel from back in November at £1.15, hopefully sometime this month, while there is no end of day close back below 95 pence. Onto a stock which had an announcement today, Bluebird Merchant Ventures. Here we bounced off the floor of this falling trend channel from December, also very low RSI trace, and a bit of a bear trap from below February support, 1.5. End of day close above 1.5 after the bear trap gap reversal that we've had today. We could be heading up towards 2.1 pence, which is the area of the 50 and 200-day moving averages. That was also resistance on the way down. Best case scenario, maybe by the end of next month, up to 2.8 at the top of that falling trend channel from back in December. This stage only really an end of day close back below the floor of the gap at 1.25, really delaying the recovery scenario. Moving on to a stock which the bears have been delighting in knocking over the recent past. Once again, slight signs of recovery or improvement. Got that bullish divergence line there in the RSI window, which has, I suppose, been operational even before the latest lows were made. So a bit of an overshoot below what one would have thought was the £6 area support. We went down to, I think, 480, something like that. So obviously rather painful, 440 in fact. So there was an overshoot on that, but this bullish divergence still in place does suggest that we could at least get back up to the top of that falling wedge. That's around the £5.75 level, or even the 50-day moving average at 650, and even that's even if we then fail again and head lower. So 575 possible rebound, 650 the alternative better resistance target. Otherwise, on the downside, end of day close back below 480, and we could be heading to new lows for the stock. In this case, pointing towards the £4 area. So pretty wide open there, but the bullish divergence is the giving it the benefit of the doubt on the upside rather than the downside at the moment. On to Caerus, which has had a bit of extra volatility in the recent weeks. We had we've had a couple of attempts at breaking the 50-day moving average, which we've been below since May. First time was last month, and the shares went up towards the 6p area. Having another crack at it now, and an end of day close above 3.9p. Could be enough to, and the 50-day moving average could be enough to get the shares up towards a retest of 6 or maybe even 7p later this month. Be backed by bullish divergence there. We've had that line there since the early part of last month, and that was the trigger for that temporary rally there. It'll be interesting to see whether it's another 2 or 3 fine days and then a sell-off for this stock. But otherwise, up towards the 6p area looks feasible over coming weeks. Moving on to a stock which hasn't been around for quite a while. I think it was a 6-month break, taking a bit of a holiday there. The only reason technically for covering Catenae today is just that we've broken that 20.28p resistance or suspension level. Above that, on an end of day close basis, might be able to creep up to 0.36 and the 200-day moving average. If you're a fan of the shares and a bit of a dreamer, then the top of that rising trend channel from March is heading up towards 0.55, but that does seem to be a long, long way at the moment. And really, well, if there's any setback back below 0.28, that would rather delay or even cancel out the prospect of recovery, but just worth having a look. On the stock's return, future metals, the next situation here, we've broken a falling wedge. We're off the lows as well. Falling wedge there around the the resistance line there around 6.8p above that. Looking towards the 200-day moving average around 9.25 as the first destination for the shares. Obviously, we don't want to see any fresh lows below 6p. First class metals is a stock which seems more interesting by the day. We've got the 50 and 200-day moving average rising. We look to be in a rising trend channel from back in the end of July, heading towards 17p, and that target valid while we're hold above the 10p level. This looks like we're going into MACD, MACD buy cross there, so that might start speeding things up a bit for first class. Moving on to a stock where it's been a bit of a negative ride in the recent past, but a bit like Audioboom, first signs of a bit of a recovery here. We've got this bullish divergence despite the lower lows for the end of September. The old support there around 7 3/4, so we need an end of day or a weekly close above that to take us up for a retest of the 50-day moving average and September resistance just shy of 10p, hopefully later this month. But the real highlight here, the bullish divergence after that lower low for the end of September. Onto a stock which has been performing quite well despite the current market conditions in the mining sector. Here we've got a situation with Galileo. Looks like it's found support at old resistance, so around 1.25, and above that we could head up to 1.75, which is that February resistance line projection, perhaps as soon as the end of this month. We've got a nice rising 50 and in fact a nice rising 200-day moving average, with this being the aftermath of a golden cross between the two, which has lived up to its promise. So 1.75 if possible while we hold above 1.25. On to Igas, which is now firmly associated with the OD asset management, I suppose. Here we've got that rebound off the rising June trend channel. We've been looking for a rising June trend line there. Here we've been looking for the 50-day moving average, currently rising around the 70p level, so maybe just a day or two away from that. The high so far today, 66.9, so that charting has so far worked with a bounce off the support line at 50 and nearing the 50-day moving average target. On to N4 Pharma, which also had news today. Here it's an improving situation as well, broken out of that falling wedge around the 1.8 pence or 1.9 pence level above that, initially looking for the 200-day moving average at 2 3/4. Best case scenario, maybe over the next 4 to 6 weeks, as high as 3.8 pence, while we hold above the 2 pence area, or 1.9 pence maybe, to be safe on that. Finishing off with a stock which I don't normally give much airtime to, but here it is today. Got Trellis Health, which is living up to its name in terms of looking healthy on a technical basis. Got the bullish divergence there, uptrend line in the RSI window. That's been in place since August, so I suppose that was the entry point there, or that time was the entry point there around 7 3/4. Break above the 50-day moving average today is the first proper break since June, and that suggests that we can head up 12 pence at the top of a broadening triangle from back in July. But this looks like a reasonable and a decent recovery so far for Trellis. That's it from me today. More updates tomorrow.